country like Indonesia, Minister, where monetary policy transmission is pretty slow, how significant are central bank policies in supporting growth?
Well, this is exactly the challenge that we are discussing. Because even Bank Indonesia is already do their part, for example, reducing the reserve requirement, they also reducing the interest rate, but the transmission of the monetary policy into the real sector activity that is stimulating the economy is quite limited. There are a couple of challenges that Indonesia is still facing. For example, like we are actually looking at the situation whether the intermediary function is it constrained by the structure or the shallowness of the financial sector in Indonesia. We also look at why the banking sector is not transmitting this to the real sector. So if it is in the US term, Wall Street to the Main Street. This is how we are actually now discussing how and what instrument we should do. So for example, that this may require government involvement, whether this is related to the risk. For example, banking sector doesn't want to lend, especially during situation, and their interest rate is stubbornly still widened in terms of their gap between the policy rate of Bank Indonesia and the real rate in the Main Street in this case. So this is the one that we are discussing with Bank Indonesia as well as the banking system or OJK. The pass-through effect of the reducing interest rate and reserve requirement is actually try to stimulate economy from the monetary side and banking side. While the government of Indonesia, from our fiscal side, we also stimulus the economy through our spending. Now we are trying to combine the instruments so that the effect to the real economy can be actually felt more effectively.
Minister, just last week, you candidly said that if there is a second virus wave, you can only pray, your own words. What kind of contraction could we possibly see in the Indonesian economy if that were to happen?
Well, I have to put it in a context. First, as a minister, and we are still, as I said earlier, that we are not only focusing on 2020 budget, we just still continue very dynamic, and that's why we actually proposing to the parliament the changes of the budget even already twice now. This is because we always continue adjusting how we are going to respond to the development of this COVID-related situation, whether on a social economy or even in the banking system. The second one is also because the nature of uncertainty itself. At the same time, I have to prepare the 2021 budget, which the president is going to submit to the parliament next August. So you can imagine that you are preparing something for 2021 while you actually still cannot control and really don't know how this is going to evolve. Because I think no country in the world can claim that I'm now safe, nothing will happen. It's not going to be that way, right? So what we are going to do is actually try to prepare of this kind of scenario. If there will be no second wave, that means the recovery on the economy for the fourth quarter or beginning very early on the third quarter of this year will accelerate it to 2021. So then that we are going to do in order for us to be able to accelerate this recovery of the economy. This is really, I mean, you are making a policy that is the commitment will last for the next 12 months for next year, while we are still in a very uncertain time. I think if I said that we have to pray, I think this is the most the humble thing that any human being can do during this kind of situation. So basically, we will try to do our best, and we always continue praying that this is going to last in not so long time.